It's great that this panel has set a little stage for our next conversation in financing the future of Europe. And my name is Daniel Gašpar from the Crowdberry platform, which actually mobilized the capital for small and medium enterprises in real estate in this region. And I would just like to have a little preparation talk before I invite the guests, and that is that there's one thing which struck me from Draghi Report, which I read partially, and with the help of AI, and that was that if we are not going to invest in the future of Europe, we will unfortunately have to abandon the values and the way of living that we actually are used to currently. And that is a very strong message, I believe. So I'm very happy and proud that I can invite valuable guests who will talk about solutions in investing in the future of Europe. And the first is Bára Werdmölder, who is heading the CzechFounders Association and Initiative. And the next honorable guest is Roman Choc, who is head of financial market and financial institutions. It's Česká spořitelna. Spořitelna, to be very precise. And the last but not least in physical presence is Zoltán Tóth from Euroventures, which is the oldest venture capital fund in Central and Eastern Europe. And we have a guest online, a very important guest, who is on the supply side of the capital. He's deputy advisor of European Investment Fund co-CEO, and it's Mr. Vladimír Bílek. Welcome. So when help me to break the ice, this is the first moderation ever in my life, and it's even in English, so please, apologies. So we would like to start with our online guest, just to manage this process a little bit more fluently. And Mr. Bílek, we heard a lot about Europe to need to catch up. We heard about Professor Draghi Report. We heard a lot about how scale-ups in Europe need to flee to US to get enough capital and exposure to achieve their visions. What is actually AIF and the Commission doing after 1 year after the Draghi Report to circumvent this kind of situation that we actually live in?
You, Daniel, and good afternoon to everyone, to my fellow panelists and to the audience. And first of all, apologies that I cannot be there with you today. My travel schedule, unfortunately, did not allow me to join you in person, and I'm very sorry about that because I would have loved to be there with you. Maybe just to start with, I have more than 15 years of history of working for the European Commission on innovation, but currently, as Daniel said, I work as advisor at the European Investment Fund, which is a very small, dedicated institution in Luxembourg, some 700 people, part of the EIB group. And what we do is we invest mainly public resources, mainly money of the European Union, of the European Investment Bank, and of others into venture capital funds and private equity funds in Europe. But we also give guarantees to banks to motivate them to lend to certain types of borrowers to which normally they might not lend so much or not at such condition, including actually to the bank that is represented today by one of my fellow panelists. Now, to your question, exactly. So the Draghi Report, I don't think it came as a cold shower. It came as a confirmation of something that was present also in other analysis and other reports. But what are we doing about this? The EU, I think, decided to take a comprehensive approach. Firstly, to try to see if more public money could be provided in the short term and in the long term. So that was by looking whether still in this multi-annual financial framework, so in this budgetary period, and Alexander talked about it before, we could find more money for programs such as InvestEU to give more of guarantees and more of venture capital support. But also in the proposal for the next EU budget that will kick in from the year 28 until 34 or 35, if we could have actually more. And you will have seen that the proposal by the Commission was to actually have a significantly bigger budget, but this is now being discussed by the Council and by the Parliament. You may have seen that the Parliament had some serious reservations about 2 weeks ago. So this is still very much in the making, and we will see more discussions. But we know that...
think this is, just to jump a little bit in, what kind of timelines do you see that these resources are coming to the market? Because China and US are running like hell, like steamrollers, and we are sometimes only discussing, and having budgets and these kind of things. How do you view the timelines?
Indeed. I think there is a short-term timeline and a long-term timeline. Some of the solutions that are proposed are really immediate. Some of them already exist. One of them, for instance, is an initiative that was launched by the European Investment Bank called Tech EU, so Technology EU, which is a proposal or an initiative that exists already to invest 70 billion into European innovation in the years 25, 26, and 27. So 25, that is already happening now. These investments are already flowing now. And this should mobilize, with the help of banks and venture funds and private investors, some 250 billion into the real economy as investments into innovation.
Okay.
But then there is the longer term timeline, which is the one when the next budget kicks in. The Commission describes this as the investment budget, and that will then only come in 2028. But there are some immediate solutions as well, with the relatively small resources that the Commission and others have available.
Yeah, I would just have one follow-on question, and then we go into the demand side, because you're on the supply side a little bit of infrastructure. What about the infrastructure, indeed? And in infrastructure, I mean not the rolls and rails, but mean like Regime 28 that has been discussed. Some kind of, unified decision-making processes, in EU, in order to accelerate the destroyal of the inner burdens that we have in EU. And what I'm talking about is basically the fragmentation of the market, which is also one of the biggest problems.
Yes, so I think one of the key initiatives here is what is called the Savings and Investment Union. Before it was known as the Capital Markets Union, and basically that's an attempt to integrate our capital markets. And because now it covers also banking, it was changed into Savings and Investment Union. And this year, I think there were two quite interesting proposals that came from the Commission. One is for savings and investment accounts. This is something that exists especially in the Nordics, where retail investors, people like you and me, can put their savings not only into a savings account in a bank, but they can actually participate also more easily in markets that finance innovation, in basically venture capital, but through a very regulated and intermediated way. So that's one thing. And the other thing is that the Commission is looking very intensively on changing the legislation that would allow banks, insurance companies, and pension funds to invest more in risky assets, in innovation, in venture capital funds and private equity. And this was proposed actually just last week. So that is now out there as one of the concrete proposals.
Excellent. So we heard the supply side of the capital, especially on the public side. We'll talk about the private. But Bára, you as a representative of the most stellar Czech founders and ambitious founders of companies that actually want to grow and need the capital, how would you actually view the dynamics of the ecosystem? And is the capital actually needed? Because that's the biggest question for me.
My question is, yes, it is very much needed. We've just discussed it before coming on stage with Zoltán, that we are proponents. If you do have enough of capital, you would have the companies asking for the capital. So certainly lack of startups or lack of companies is not the problem. I think the problem is that there is not lack of the later stage capital. Just to maybe set the stage where we are here in the Czech Republic, I do represent CzechFounders, it's just a community of founders. We do create approximately around 2% of the GDP. Unfortunately, we still do not have the definition what startup is. So this is really roughly an estimate. And last year, when this morning I was getting ready for this panel, last year over 590 million euros was fundraised for the startups, and approximately 80 rounds. What is more staggering is that only 8 out of those 80 rounds was above 5 million euros. And that's the money that we're talking here about, that basically if you do want to raise for your expansion and go global, the money is not available here. And that's the funding gap that we're talking here about in Europe. This year we've seen a little bit more rounds, like 12 of them was above 5 million euros. So yeah, so this is basically where we are at, and I think the question for the government, and Mr. Bílek partially mentioned it as one of the solutions, is basically allowing the average Joe to come and open a savings account that is able to invest into high risk, which today you cannot. If you just walk into a bank and fill out all of the investment tests and everything, and you do ask, please, can you put in my money into VC or in a portfolio that contains VC, that's not possible today.
Right, as a native Slovakian, I'm getting jealous. Anyway, the question is those founders that have raised those 8 rounds over 5 million euros. What kind of situations, or can you give us an example of a company that was trying to raise huge or higher amounts of capital in, let's say, Series A, Series B, was not successful here, had to tap funds from abroad, and what was the experience of it? Do you have an example of that?
I think if you're already looking for the money, you're already looking for the money outside.
Already from the start?
Yes,
okay.
Exactly. So that's not that, we were not successful in the region, therefore we go out.
Okay.
But I think what is very important also to say, like, you go where your customers are, you go after your market. So, we just recently ran a survey, and it basically turns out that every third founder thinks that they would move out from the Czech Republic within the next 12 months.
Wow.
Which is quite harsh, I would say. But on the other hand, we must say, well, your market is outside of Czech Republic per definition.
Yeah.
And the other reason is, I'd say, you operate here within 27 markets. US is just one single market, so to scale within one language across a population of 300 million is much easier than to scale across Europe, which, is larger in population, but has 27 of regulations. And, Mr. Bílek has mentioned, 28th regime legislation could be an answer to that, how to make our lives, or lives of the startup founders and investors and actually employees of the startups easier. So I think that's like those twofold, is the market and the regulation that is a hurdle. When you look at the companies that were successful raising funds outside, that's exactly the story. The primary reason is not only, there is no capital. Yes, there wasn't the capital, but it's also because their markets are outside, because those were software companies.
Okay, I understand. And I have to confirm that even the very simple cross-border capital flow, Czech Republic to Slovakia, Slovakia to Czech Republic, in equity is very complicated for private investors due to the regulations and due to the infrastructure. I will turn to Zoltán, because he is a veteran. Euroventures is the oldest, central European venture capital fund. And that gives you a lot of experience, how actually the capital flow and the absorption of capital capacity by the founders has developed. Can you give us some kind of examples and your experience over the decades of Euroventures, founded in 88, if I'm correct? 90?
It was founded in 89.
89, yeah. Is it? No? Yeah, thanks.
Happy to be here. Yes, our fund was one of the first one in Central Eastern Europe, started in 89. I joined the industry around 1999, so a bit later. But the good thing about our industry is that things come and go, bad things. Good things as well, but it's not just a constant flow of growth or not a constant steady state. But our industry started actually with growth capital, not VC. VC is the latest step in the game. So initial growth capital came in, and then buyouts started at around 2000. It was only after 2009 when VC investment got kind of up to the front. And I think EIF was a very important catalyst of this, because on a non-existent market, basically VC investment didn't exist before 2009. EIF money came in, and basically the point of that money was not necessarily the growth of individual companies, it was just creating the whole idea and creating the ecosystem. Having some money that would draw in, help some startups, Then some more money came in, more startups came in, and basically, we got to this virtuous cycle where liquidity on the market, a little liquidity, created some liquidity in the financial sector. So there was liquidity of opportunities, and liquidity came in as well. I think when we look at Europe's future, a model like that can help. It would be a first step in kind of growing further VC financing in Europe, but I think it can be a good step if it's done well. And I think the key advantage of the program was that actually in Central Eastern Europe, it created basically fund managers. So it was not a very efficient program, admittedly. A lot of money was wasted, but it was learning money. So people who never thought about being a fund manager before actually could raise some money relatively easily, could invest it and learn from the mistakes. And those who were successful were able to basically bring in outside investors, institutional LPs, individuals. And I think, it's a great example of showing a catalytic role for EU financing.
Yeah, well, this is a good example of the transmission mechanism of the capital into the market being developed. The Israelis would be able to talk a lot about it, because there's a lot of flush of capital, a lot of capital burned just to erase the ecosystem. But I wanted to have some kind of real-hand examples from a portfolio, whereas your companies were raising Series A or some larger sums of capital. Is there any kind of experience of interaction between the, let's say, overseas fund and the local European fund? Is it kind of mental gap there, or is there kind of approach gap there, or what is your experience in raising larger amounts of growth capital money?
The US is just a very different market, and I think comprehending it is very difficult even for us and for founders especially. There's a lot of money in the US, but that money is looking for different kind of opportunities what Central and Eastern Europe can, in general, deliver or offer. There are exceptions, as there's been at least 24 very successful Central European companies over the next 15 years, to be fair, that were able to raise money from the US and actually grow to, people like to say unicorn, but anyway, grow to a significant size that would bring significant return for foreign investors and have a global presence. But all in all, the US is characterized by a huge amount of money, which means there's a lot of liquidity. US investors are very quick to make decisions, put money into deals. It's great, they make quick decisions, they're very flexible in terms. On the other hand, if things don't go well, they just leave the company alone and go to the next venture. European VCs don't have that luxury of indefinite money that can come in, after they put the money in. So they have to think more about the downside. They have to think more about the longer-term perspective, making sure that the company can get to break even if there's no follow-on financing. But on the plus side, they also tend to be more resilient. They stay with the business. They try to help it out if it gets into trouble. Also, in Europe, it's not a winner-takes-all mentality. So we talk about unicorns a lot, but in my career, people made a lot of money with a 60 million euro exit, or even with a 30 million euro exit. So unicorns are great, and if you can achieve that, that's great. If that's your ambition, that's great. But on a more realistic scale, people can build, great ventures if you only get to 60 million revenues. I mean, let's face it, most of us couldn't do that. So I think in terms of ambitions, we are not a US market. We never will be. US has an amount of money that would take, a decade, or not a decade, 3-4 decades to catch up with in terms of available money. I think our role, and for Europe as well, figuring out what is our profile, what is it that we can do better than others, and what is realistic for us. And then try to put all our resources behind that, rather than being a competitor to the US. It's just not going to work.
So this is actually a very good note-taking to start humbly and produce more companies, quality companies with maybe not the unicorn ambitions. Well, we touched upon.
Sorry, I disagree.
Yeah, okay.
I totally
That's
disagree.
great.
I
Disagree,
think
that's well, yeah.
the lack of ambition is exactly the problem Europe has.
Yeah, that's a good one. Yeah.
CzechFounders are trying to group together a community of founders that have global ambitions from day one. I think also the unicorns that you see here, because 3 unicorns here in Czech. If the founders wouldn't be bold in the very beginning and wouldn't, from the very day one, wouldn't, and also some companies that didn't hit the unicorn status or nearly hit the unicorn status, we got a few as well. If those founders, when you speak to them, they knew 15 years ago when they were founding the companies that they are gonna, or they want to rule the market. So I really would like to, yes, we can be somehow humble, but this is exactly what we are missing when coming on to the American market, be it on the investor side or on the founder side, that we are just humble.
I love your passionate reaction.
Well, yeah,
on this.
sorry.
It's awesome. I must say that being a unicorn and building a great company is not necessarily the same. So this is what I wanted to say. And just moving on to the largest bank and the bank that actually creates the infrastructure of the economy. We heard about scale-up startups and ambitions to be, billion euro size of companies. But Česká spořitelna is actually doing also a lot for the innovative SMEs and the backbone of the economy. And plus also is more and more involved into the startup and scale-up ecosystem. But Roman, you as head of the financial market, is it enough? Because I have the impression that it's not enough.
Good afternoon, ladies and gentlemen. Yeah, it's not enough, to be honest. So just as you mentioned before, we also see the SMEs segments as an engine of the future growth, I would say. Yeah, so one thing is startups. It's absolutely perfect, and we are focusing on as well. Yeah, but to be honest, we have to motivate our SMEs client to be more active and encourage, because we can see them as I would say conservative, focusing on the lending, self-funding, no much, I would say, intention to go to the capital markets. Yeah. So then I think that the role of the bank as such is to motivate the SME, not only SMEs clients, but all clients, to help us to create a capital markets in the Czech Republic, I think, right now. Yeah. So our role is, I would say, the first to change their mindset, and observe that there are the many other options how to be funded, so just not lending. Yeah, we are focusing on lending as a banks, so just it's also about changing our mindset, yeah, and create some value proposition for the clients how to be funded, not only while lending, but also for IPOs and capital debt and something like that. Yeah, so that's the first thing. Yeah. We can do that via, I would say, hybrid principles, yeah, to create a proposition and say, okay, it's perfect for you to take a loan, but that's not only, so just we can arrange for you some bonds, or later on, we can help you to go to the stock markets, yeah. That's the first things. Yeah, additionally, about the SMEs, we are running to reach the highest market share in the loan side, and that's our disadvantage right now, So and it's about our internal KPIs, that it's about the strategy. And that's the second thing, that it's not about Česká spořitelna as such, it's about the system. If we would like to change, I would say, the Europe competitiveness, yeah, it's about changing the system. Yeah, and to make it, I would say, for example, the access to the capital markets much more easier than in current situation. Yeah, that's the I would say the big advantage for us, because we are able to create it together with the private sector and together with the state.
No, I see that. Actually, there was a kind of line from a context from European Investment Fund, which I cannot name, but the quote was, the problem with mobilizing, especially pension capital, is the white man 5 years before the rent, who is not able to take any risk to risk his career before he's going to be retired. And that's why a lot of pension money is actually blocked from the system. But going to another part of the question is the amount of private capital sitting idle on the bank accounts. And I know the banks are making a lot of money out of that, fairly. But if you see the Draghi report, it approximately 10.5 to 11 trillion euros is sitting in Europe. And Europe has a 21 trillion euro economy, so approximately half. And then guess what, in Czech Republic, it's even more interesting, because if my numbers are correct, the Czech Republic is like 330, 340 billion euro nominal GDP economy. And over 310 billion euros is sitting idle on the bank accounts. Huge amounts of money. I was so shocked when I was preparing. So what does Česká spořitelna do to mobilize those into ambitious startup scale-ups and SMEs?
Yeah, it's a very good question. It's, I would say, the current mainstream. Yeah, we are thinking about it, how to do that. Yeah, because on the other hand, we can see the huge amounts on the deposit side. Yeah, it's a billions there. Mm-hmm. Yeah, the problem is that it's about the changing mindset of our clients, especially retailers, you know, because savings is pretty good, yeah, but it's a sleeping money, yeah, and you can wait and observe how to inflation consume your money, or you can invest, yeah. The problem is about I would say, the holistic advisory to the customers, yeah. So just create some reserve on your current account, mm-hmm. and then you can go to the investments, yeah. I'm not talking about the risk appetite of Czech people, yeah, sure. Which is very low, I would say. Okay. That's the first thing. The second thing, it's a changing mindset of banks, you know, because previously we recognize the deposit as a source for lending, yeah, and I think that it's not only the liabilities on our balance sheet management, but it is sleeping assets. It's a sleeping capital to be invested in, yeah, for future growth. Yeah, it's about changing our mindset as a bank, you know. So that's one thing. The last thing is about if we are looking to the current situation of Czech investor, especially in Česká spořitelna, yeah. So I would say only 5% of overall investments, which we are doing, going directly to support the Czech economy. Yeah. Only 5%, yeah, to be honest. Yeah, so the rest is disappear overseas, you know, and nothing else, yeah. And that's the second round of the exercise, yeah. We should motivate our clients to invest to the Czech or European economy.
Excellent. That's a very good topic for next year's Velvet Innovation Conference. As another panel, we can continue this discussion. We are running out of time, and we started to roll only now. So I would turn to Mr. Bílek. You heard there is demand. You heard that there might be a lot of supply, but it's unlocked. And you also heard that there is investments needed also to build up the asset management ecosystem, investment management ecosystem in startup scale-ups and SMEs. So what do you do about it?
That's the million-dollar question, actually. No, I think, to be very honest, I don't want to get this message of doom and gloom. Yes, there is a lot of problems that we have. Yes, there is a lot of idle money in banks, in pension funds, and in insurance companies in Europe that is actually, to a large degree, then used to invest in American promissory notes. So we're fueling the growth of the American economy rather than the European economy. Yes, we have an issue with scaling up companies. In fact, Europe is very good at startups. We have fantastic people, good universities, excellent talent. I agree with Bára there totally. But when it comes to scaling up companies, very often these companies move to the US or are acquired by the Americans, and eventually we buy the same technology from the Americans at a premium as clients. That happens often. But again, I don't want to sound negative. We have identified a lot of the issues, and we actually also know a lot of possible solutions. Build up the capital markets, invest in scale-ups, start really a big integrated technology stock exchange in Europe that could somehow rival NASDAQ. We know roughly where we need to go. As you said, we have a lot of rich citizens in the EU. So possibly, it's not going to happen tomorrow or by the end of the year, but possibly there is a path that we can take that will still allow us to be very competitive and to invest in the future today and reap the benefits of that when, well, hopefully I'm still alive and I think all of you as well. But more importantly, our children and their children will be alive and will enjoy the life standards that we have in Europe, because in the previous panel, I think there was also a message that we may need to give up on the European way of life. And I hope that we will be able to invest in such a way that we will not be forced to give up on this European way of life.
Excellent news. I think this is a good one to conclude the panel, but I will ask for 2 more minutes because we run out of time and there will be no time for questions. I'll get better next time, I promise. Bára, how can you help Mr. Bílek to achieve this mission with your input? This is out of scenario now, okay? How can you help them? And how can you help Mr. Choc in Česká spořitelna from the CzechFounders side?
Okay, so first of all, we've been, and I must say, like in the last 12 months, we've been quite very active in contact with the European Commission, and what the European Commission has done under Commissioner Zaharieva, who's the Commissioner for Startups, is absolutely great. We have the Innovation Act coming up. I think today was the last round of consultations for it. We have the EU Scale-Up and Startup Strategy up, and we are excitingly expecting the 28th regime legislation hopefully to hit in March. So I think really to give up the kudos that the Commission is finally taking this step. As well, in the Czech Republic, we will have the new government. It seems like that this government is going to more acknowledge startups. Czech Startup Association is preparing a startup law. So I think good times are ahead. What would be the tips? I think certainly anything co-funding, co-investments, be it on the angel side of things or on the later stage. Same thing with the pension funds. The pension funds, there is no legislative problem of allowing pension funds to have in their portfolios VCs at all. You see it, Aspire 11 and generally are offering that actively today. The trouble is that today has been just so beneficial, the current products that they are having, and they are making money of it, that it's fine. So they're not, so they're not encouraged to help. So if the state can do something, please, make them less risk averse by offering some co-guarantee or something. Some examples are, for example, from the Netherlands. So I think that's that, and very importantly, that financial literacy you were mentioning. 100%. Like, Czechs are not the most pro-risk people, and it's very, very important to spread that education. It's really, really low here in Czech. So I understand there needs to be a demand for it from the retail sector as well. So,
I'll steal you the word now, 1 minute. Roman, just a quick one. What would you need from Bára and Mr. Bílek, and generally also your customers, in order to Česká spořitelna to drive more capital into the innovation, and also Erste Group into the whole region? One thing. Be smart.
I think that is about the dialogue, Okay. Yeah, so just that's the only one thing, because as I mentioned in my previous speech, it's not only about the banks, it's all about the system. Yeah, let's be speaking about it. Yeah, so just we can invite you and discuss about how to, I would say, make it easy investment from the pension fund to the startups. It's no problem. We have no problem with that. Yeah, it's about speaking about the new govies about it. Yeah, so just let's be speaking about it. That's the one message.
Oh, lovely. Thank you. And last but not least, our guest from Hungary. What do you think is the silver bullet that the investing in Europe's future and keeping our standards and values as Europeans should be taken in order to be successful when we are retiring in 30 years' time, 40, 50?
Well, I think it's just too general of a question. I think on the long term, I think, with these big programs, the first thing is to do concrete things, even small ones, as soon as possible, rather than, waiting with a big program to kick off. But I think, all in all, I think the institutional investors framework should be changed. I think people who keep money on their accounts are not going to invest in VCs. They have to have a chance to learn that they invest in funds who will invest that money into VCs for them. And I think when it comes to the public's education, I think that's probably the first step. And I don't think it's necessarily banks' job. Actually, it's kind of even contrary. I mean, there's some competition there. But I think that this is something that can help and just create a network where people can feel more or less safe, or at least understand the risk that they get into when they invest that money into small businesses.
So with that, thank you very, very much to everyone. I'm not going to name you now because we are totally out of time. So also thanks for the audience. And the bottom line is ambition, transition mechanism, and obviously the capital that needs to flow to burdens, to lessen the burdens in Europe. Thanks. Thank you very much. Yeah.
Goodbye.